Everyone. I'm hoping everyone is having a good time at home and keeping safe from all this quarantine COVID-19 issues. So, today I want us to go through um, some of the indices from binary.com. That would be Boom 1000, Crash 1000, Crash 500, and Crash 1000. Okay, so I want us to do some analysis together that finally we can be able to understand how to sort of quote unquote hack this market. Okay, um so the problem or the challenge that I see with many traders when it comes to trading boom and crash indices is that they fail to check the daily time frame, and this is very important, especially as a trader, because the daily time frame will give you an idea of what is happening on that particular day and what has been happening on the previous days. Okay, so what I do for analysis is that I open in this chart. For example, this is Boom 1000 on the daily. Let me get some brush. Okay, so I draw my support. I don't know why actually I'm using this, because there's a tool for that. let me use that instead. Okay, let me disable this and then come here, get my tools in order, put it here, make it thicker, a little bit thicker, probably like 3, that is visible for you guys. Okay, and put one here, actually around this point. And what am I drawing? I want to shift our minds from seeing resistance and support as a position. I want us to see it as an area of support and an area of resistance. Okay, because I also see that as an issue with some traders. So let's put this one here. And where is our region of support? Oh my guys, I don't know if it will go up. I'm sorry if it's not as precise. I'm having challenges to push it further up. See if it will. Oh, good. Let's lock it in. So this is our region on top of resistance. I always see resistance as a ceiling and support as the floor. Okay, so with that in mind, then we can proceed. All right, so looking at the daily, what has been happening is that price came. Let me get my trend lines. Let me make it a little bit thicker. Okay, put it at probably 3. So price, this was a movement of price. Okay, so it came here at a region of support, and what happened, oh sorry guys, okay, what happened is that when it reached support, price rallied up. So I'm assuming probably there was a lot of buy orders, but again, this is binary, so most of these stuffs are synthetic, meaning they are controlled by binary.com, the movement of price and all that. But sort of price action still plays a role here. Okay, so we have identified how price moved, and then the most interesting part is that at this region, we also see price being rejected most times. Like even there was a point, at this point it failed to rally upwards at that point. So and at this point, at that point, and now price is here, and there was also a rejection. It makes us think that there must be some sort of resistance or force around this point. Let me use just that term, because see here, price again was pushed up as it was trying to rally down. So It's a religion to keep in mind. However, once I have my support and resistance, main support and resistance, I am good to go. Okay, so now let's go to, I'll put a vertical line here, make it a bit thicker. So I want to take you through my analysis. So it may sound boring, but the best thing for trading crash and boom indices is being able to identify the movement of price on higher time frame, and after identification of the movement of price on the higher time frame, then you can proceed to use your strategy or whatever on the lower time frame. Okay, so that will be what we're going to go through on the next video, but for now we're looking at how to identify the movement of price and where to know where it is, how to know where it's going. Okay, so I'd normally move to H4. So I want to see what price is doing. Let me move to H1, should get a better picture. What has price been doing? Price has been forming higher highs and higher lows. Okay, and pick a blue color. Size, let me make it a little bit thicker. So look at what price has been doing generally. Oh, okay, look at what price has been doing generally. Oh, sorry guys, it's very thick. Okay, so look at price has been forming higher highs, higher lows, higher lows, higher highs. And even to put it into better perspective, as you can see there, it went up around this point, came down, went up, came down. So it was forming higher lows, went up, came down, formed a higher low, formed a lower low, formed a higher low, formed a lower low. So at this point I think most of the people thought it would sell, and this is a very good trap by binary, and then they pushed price up. It rallied up and then came down and formed a higher low, went up, formed another higher low, went up, formed a higher high, formed another higher low, went up, formed another higher high, formed another higher low, and now it's trying to go up. Okay, so what is the essence of higher low, higher high, higher low, and what are actually these terms? Let me explain. So as movement of price is going up, this is how it goes up. It goes this way, goes this way. Okay, these ones, these are called highs. These, on the other hand, are called lows. So as price is moving up, it will always form a higher high and a higher low. So a higher high, higher low, higher high, higher low, meaning this low is often at a higher position or at a higher point of price than this low, and this low is often at a higher position or point of price than this other low. So let me name them: A, B, C, D, E, F, G. Okay, so A is a low, C is a low, but C is a higher low. A is a high, C is a high, but C is a higher high than A because price is not at the same position. Even if you draw like a line here, okay, and then let's draw a line here. Okay, see that C, pun intended, see that C is a higher high than A. Okay, compared to A, it is at a higher place of price compared to A, and D is at a higher point in price compared to B, so it formed it formed a higher low. Okay, so A, C, E highs, B, D, F lows. As price is moving, it will always form higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. Okay, I hope you've understood that. Higher highs, higher lows is equals to upward movement. If you can write that down, that would be great. Let me undo everything. I don't have to use my eraser to remove them. Okay, undo. Same applies to price as it's moving down. Okay, so how does price move down? Price moves down this way, this way, this way, this way, that way. Okay, that way, that way. Sorry, let me draw it well. Sorry about that, guys. This way, this way, this way, this way, this way, this way. Okay, so this point, this point, this point, A. Let me use another font so that it's easier for you to see, guys. So these are lows, and these are highs. These are still highs, but this is the downward movement of price. Okay, and as price is moving downwards, it will form lower lows and lower highs. Okay, so it will form a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. And even if you draw price, this movement, meaning, let's say I'm going to put A, B, C, D, E, F. Okay, meaning price at A is price at C is a higher low, a lower high compared to price at A. Price at E is another lower high compared to C. Price from at D formed a lower low compared to B. Okay, and that is the whole concept of higher high, higher lows, higher high, higher lows. So how is this concept applicable? So now let us see how this concept is applicable onto our next video. I hope you understood. I want to put this concept short, in less than 10 minutes, maximum 15 minutes, and then we move on. So in the next video, we're going to look at how to apply this concept in crash and boom. But I hope you understood what a higher high is, what a higher low is, and what a lower low is, and what a lower high is. So let us put it in summary. Okay, price will, as it's moving upwards, will form a higher high, a higher low, a higher high, a higher low, and another higher high, and another higher low. Okay, so higher high, higher low is equals to upward movement, and the opposite is true. When price is moving down, it will form a lower high, a lower low, a lower high, a lower low, a lower high, and a lower low. So as price is moving downwards, it will always form lower lows and highs. Okay, so once we have that in mind, we will now be able to tackle crash and boom. So let's do that in the next video, how to make this practical in our charts. Thank you guys for joining in. See you in the next video.